Good evening, Wizards, and welcome to episode 19 of Wizard Wednesdays. Now, very interesting week again ahead in the markets and what we've seen over the prior week since the last Wizard Wednesdays, where the majority of the analysis came through to absolute perfection, minus two failing trades that didn't quite go to target over the past week or so. So we've had a fairly good week. We have not necessarily lost anything large, and we have not won anything necessarily large. It's been a nice stable week for the market ahead. Luckily, we had a nice consecutive 3 to 4, maybe even 5 wins in a row before the losses, so not too stressed. We'll be going over all of that anyway. You know, we're not here to cover that up, we're not here to lie. I'm always here to address anything that does not always go to plan. I'm here to cover both sides of the market, regardless if it turns out correct or if it turns out incorrect. That is the beauty of CryptoWZRD. We are transparent, we keep things simple, and we will be progressing to the BTC side of that very shortly. But I did want to touch on something I did cover last week in Wizard Wednesdays, and that was the absolute perfection of XRP. So as you can see, we slammed down towards that 28 cents target, which was a big expectation even from that 30 cents region. But overall, despite the wick fishing and the manipulative spike to that level there, the overall approximate price closure was around the 30 cents region, as you can see from the weekly candle closures here. Now, if we go to the prior week's episode, we just played this
level, and there could be a little push lower down to this zone before price begins propelling higher. So in terms of upside targets, I still have 46 cents in my sight.
So pausing that there as well, again, pushing forward on this upside target. I still absolutely believe and have this in my sights. This was an amazing long opportunity there, by the way, upon rejecting our external trend line. As you know, following very simple rules, we originally had it there from this target here, from wick to wick, and as the wicks progressively spike lower, you always extend this trend line out to address the newest trend line in progress and play. And if you extend that a little further, as you can see just there, we've seen a pretty perfect test, closure, spike below to stop loss hunt, all of those people that longed from that region there, pushing lower, landing straight within this accumulation zone here. As you can see, yet again, we are now back within this range. And if I was to actually get rid of this right now and just put this here instead, you would see we are consistently bouncing from zone to zone. And even if I push this a bit higher, you would see here price has been pretty much fluctuating around these regions for a very long period of time now. So let's just bring that all back together for a second, extend this trend line back out to the most existing one. And as you can see, we had a trend line within a trend line, where this trend line here was holding on the shorter term. We broke through, pulled up, held this level, and tested up here as well. So what I'll do for now, I'm going to leave this here because this is going to be a huge guidance for us upon progressing higher very soon. So looking at this now, you can see, if we go over to Wizard Wednesdays,
for the short
I
term,
believe it was here, the Fibonacci extensions that aligned. We saw the targets at around the 28,341 level. Now, if we go over here, 28,341, we pretty much landed precisely within that exact level. So now we've seen that level come through and that overall fulfillment unfold. I did state anyway on Twitter and in the Telegram, I did believe XRP had the possibility to dip back below the 30 cents region, and that's exactly why you would have recalled on Twitter where XRP was around this region. I did say if we were not closing solid above 48 cents, this is a time to take your profits. And again, looking at how price has fallen now from 50 cents down to 30 cents, it yet again proves why profit taking is absolutely essential in this market. Everyone was just going for the next big targets of $1, $2, $3. The same goes for BTC when we were up here. Now, granted, we did not expect the pull down to happen so soon, and we have just rejected this level, but I do believe this is now going to start progressing us towards our original existing targets. As you know, this level 8,400, every single Wizard Wednesdays I've told you it's going to come through, and we are now dipping closer and closer, falling into that $9,000 region. I do believe we are going to slowly start gearing up. As I said, these levels have been highly accurate, and unfortunately we could not manage to catch that push higher, as what happened was, just as we're seeing now, price broke through, tested the $10,000 support, pushed up higher. So we did have a significant and a good 2 trades out of this movement anyway. However, on the third movement after holding this level on the daily, we slammed through, broke below. We've now tested this level here, and I do believe this is going to aid a push and a retest towards this region here, potentially even exceeding up to around $10,400. If I was to get a Fibonacci tool up here very quickly, Very simple stuff yet again. You can see the extensions are nicely aligned right in between our support and resistance levels, which are now both resistance levels. Looking at these downside targets on the extension, yet again, perfect alignments with prior price action around $7,900 and of course $8,570 approximately. Extend that zone out and you can see just over here 8,400 with the prior wicks. We are looking to have a very nice clear level of support and resistance coming through over the pretty much foreseeable future. So going to the 4-hour perspective on BTC in particular, I did state in Telegram, if we get that up very quickly, going over to Telegram over here, I did state yesterday, I believe it was here, so in a flash crash the stop loss was hit. Again, just threw that out there, the stop loss was hit pretty quickly after that trade execution. At first it actually went just above, didn't actually trigger me, and then it pulled up a little higher and slammed through. So once that scenario came through and unfortunately the trend line retest did not unfold, it was not looking like it was going to slow down anytime soon. That is why upon seeing that unfold, we did state, and well, I did see this continuing down to 9,250 down to 9,200. From there, we also said from there we would dictate is simply a part of the process, do not worry about it, and then we can understand and identify retest towards $10,000. And literally within a matter of a single 4-hour candle, we've gone from $9,100 around that zone just there straight up towards $9,800. So at the time of speaking, we're only $200 away now from that $10,000 retest, and I do believe this could exceed expectations just slightly to even reach that 10,300 to 10,400 zone, where I would then begin to identify and potentially start gearing up for shorts to fall into place towards that $8,400 region. One thing that we do need to take into consideration, however, is this has just come through, something I've noticed. There is a bit of room to fall, obviously, to maybe 8-9 as well with that support just there. We have not necessarily hit any crucial region, but if I do drag this down from a body-to-body perspective, you can see there's a nice alignment now with our fib targets and the fib retracement level as well. So just using what we've done in the last episode, a nice cross combination of the Fibonacci extensions here. The more they confluence with each other from the upside and the downside, the more clearer it is for you guys how price could be unfolding next. But the one thing we do need to take into consideration, especially until we actually want to see a real bear market confirmation, I think this is a big wake-up call from actually telling you guys to get out and not buy at the $13,800 region, because now we are sub $10,000. Imagine how many people, if we actually go back in time to just a few weeks ago, who were posting even on the Wizard Wednesdays, you can literally check the comments, people were saying it won't go back below, you're crazy, this, that. It's happening again and again and again, and it's just proving patience is the art of the game. And despite what may go wrong, we are still seeing our original bias from weeks ago slowly unfolding in our favor. So putting this into consideration, I do believe now we have seen a nice extension lower. We've broken through 10,000. It's more than logical to see this level be retested with a little push. There's a nice wick over there as well, broken, annihilated all these wicks. Let's try and regain some traction and see how this will really unfold. In terms of, everyone is saying, and they are still talking about the likes of all-time highs being broken and even $16,000 being met soon. Now, of course, when we do still look at our upside Fibonacci targets, we cannot disregard it, because obviously it is still a very present level with a lot of strong predominant price action involved around this level. But in saying that, when you do look at the upside target as well, when you look at how this wick has pulled down, we are now pushing, but we still have a higher low. We have not necessarily wiped out this low here just yet. So we are still progressively moving higher. And this correction here, which was stated from here, is still a very healthy pullback and a very healthy correction. It's more than necessary. Many people did not believe that you could even see $7,000 worth of, that was several thousands, not $7,000 worth of pullbacks around this region. But of course, the higher you dip into that $10,000 region or a 5-figure region, the more likely is the pullbacks will be in a 4-figure sum as well. So looking at this now, overall, looking at what we are seeing, all this progression, I do believe this should be providing a nice breakout to the upside shortly. Again, one thing that is on my radar as well, just as we are moving in this formation right now, I will draw a channel, because we are in a very strong channel right now, something I would duplicate and drag over to here. We are seeing a pretty strong channel on BTC right now. So take this into consideration, how we've seen seen it before. We've seen something very similar over here. This could be providing some nice long opportunities for you all. So yet again, due to these market conditions, we're not going to jump the gun. You can also consider that a level. You can also consider it from there as well. If I extend that out, there was a channel which was broken, consolidated, and pushed higher. In order to move in favor of the downside bias towards, let's go back to the daily, towards our targets down here. Let's now clean this and get rid of this. In order to see, this is why I'm going to provide you these scenarios, to see the likes of $9,000 again, breaching into $8,500, down to $8,000, which for me is a major level of region and caution. I'll put that just there as well. This channel must sustain and continue. Very simple, very clean price action. It's very rare to actually find a channel as clean as this one here. However, with this unfolding in our favor right now, all you need to start looking at is a potential Fibonacci setup here. If you drive straight to this region, guess what? This would aid a further pullback to the $8,400 region. I've even said before we can even consider breaching all-time highs or even consider going to this $16,000 region, I do believe we are going to see that push to $8,400 first. Huge region that has been left unfulfilled. We've just fulfilled the retest here on that wick, as you can see, as we had with the prior highlighted zone just up here. But now, looking at the likes of $8,400 just here, where there was almost a head and shoulders forming before the breakout, huge region of interest all the way down to here. And again, you can still see that entire movement come through without physically breaking the lows and continuing us even lower. So our $6,000 was a massive region of interest. What you are still seeing is a major possibility to 8,400 to come through. So just remaining level headed here on this whole perspective. This does make pretty good sense to me to see a final push lower, hopefully around this region here, before we really bolster up and begin gearing all the way back up. As long as these lows are not taken out, of course, if these lows are taken out, we are going to be looking at a retest of around $8,000 before flying all the way down to $6,000. So it really is happening now, guys. The real pullback has been confirmed. We're not necessarily in a bear market. We are just seeing a major profit taking occurring. And of course, we're seeing consolidation after a huge bullish run. This was logical. This was something covered months in advance. Even when we started kicking off, it was inevitable. It was going to happen, and it will bring us back to reality of where price can come crashing down to very soon. So that same inverse head and shoulders there, major region of interest, but only if we see 7,600 broken. So again, as I always remind you every lesson, I'll bring it up, but we will always disregard it until we get nearer to that target. But it is getting pretty close now, to be honest with you. So in saying that, and also combining this with the Fibonacci extension here, whether that's there or whether that's up there, overall we are still looking around that level. With a little push higher on a daily perspective, you could still see 8,600, 8,500, 8,400 come through and still close back below these regions, or back above this region, sorry. You can see the precision on 8,800 where this prior price action was as well. It's adding up and painting a pretty solid picture of where this market could be heading next. So short-term rise for now, looking at around 10.3 to 10.4, maybe a little fake out spike here. As long as this remains within this trend line holding as resistance, then yes, we are looking at an incredible short opportunity to really maximize profits down to this zone here, where I will then be beginning to take profit around this level, even $8,000, and catch a huge breakout to the upside. What could be happening from there once we start seeing these regions fulfilled is a breakout, retest around this level here, and then continuing all the way up, I'm not even joking, towards the original targets of 12.4 to 12.8 before breaking higher and exceeding $16,000, $16,500 as we slowly shift to the end of the year. Still a massive possibility and definitely not something to rule out just yet. In saying that, however, should we see this breakout straight away, then it'll be a very similar scenario. So what we're looking at right now is either a retest to continue lower and break out, or a breakout. It's only once we see this movement come through can we consider any further downside. For all we know, this completely fakes out now, breaks through to here, which is very possible, a big region of interest for me. That's why I'm providing these two scenarios. If you see a breakout of this trend line, you can start expecting retests and pullbacks from around 10,800, pulling back to retest the likes of 10,000, and then we propel straight to all-time highs again, the same regions here, pushing up to that level as well. Very big possibility and a pretty interesting theory as well coming through. So if we drag that up to there, around there, give or take. As you can see, a little pullback to this level where the prior wick was. It aligns with around 9.7, 9.8. Overall, prior price action around here makes perfect sense as well. And validity to see that breakout, even test through here very quickly before propelling over there as well. So we're looking at these two scenarios now. It's best to just be patient, do not prematurely enter, and there's no point trying to catch longs up to this level only to see this fall back down straight away. Just wait for price to hit this region. If you start seeing 2 or 3 candles sustaining, you have a short opportunity on your hands all the way down progressively over a few days towards 8.3, 8.4, 8.5, whatever that may be, will dictate further. But all I know is 8,400. I've been saying this for so long now. It's on the region, it's on the cards. We're literally less than $1,000 away. I can see this occurring in the short term, very likely. So putting that in consideration, you have this theory here. I will mark that in black, and then what I'll do is I'll just change this to a different color just for ease, and we will put that there instead. So let's just say we hit there. If we do not see the breakout, then you will just expect a simple retest there, and this will then start smashing us through towards $6,000 over there. So I just thought I'd use the lines. I haven't really done this before on a Wizard Wednesdays, but just to give you a bit of a perception on what should be occurring regardless if we do see a pullback. So even taking this out the picture for now, I do see 2 situations coming through. Holding the level, nice short opportunity, break above, let's continue going higher. So in saying that, let's move over to XRP and also have a look at CoinMarketCap. Forgot to have a look at this. We're still at that 65% region, 65.3 to be more precise, and we're looking at a nice green day back in the markets again. Everyone's talking about the altcoin rally, the altcoin surge, altcoin season. Is it coming and is it going to happen? Of course it is, and one of the biggest dictators of this price action is of course XRP. What you're looking at here is another 28 cents region. All you see, BTC and XRP in particular, they can work similar, but they can also be massively different. The only difference of XRP is it is heavily suppressed, and there's no doubt about it. There's no coincidence that every single time price goes higher, it pulls back down to this same support floor we've been seeing pretty much since August. As you can see, the 6th of August 2018, not to mention it was once resistance back in 2017 May before the bull run. The level we broke out from that caused the bull run, it's here. Guess where we've now been resting from as support ever since. This level breaks, and of course you're going to see 25 cents and even drop down to 20 cents, which is still a possibility. I wouldn't even consider disregarding that. If the trend line was to break, all I'd be looking for, simple retest and short this bad boy all the way down into the 20 cents region and even dipping a little lower to 18 cents. But that's not very likely and a very, very unlikely scenario for the time being in particular. So just watch out for the price action here, because the second trend line is also used as a bit of guidance for me right now. After seeing a little forced breakout here, pull back higher, we're now rejecting this trend line as resistance. So just monitor this price action around this region. Obviously your best buy entry was here, as many times over price has very rarely broken below this region. So it would have been a nice tight trade. Your levels were given a week in advance, and it was also covered in Telegram as well. So looking at this on a 1 hour perspective, we've now started driving towards the second trend line, and even if I was to drag that a little lower for a bit of precision, you can see the precision that's occurring there. Now all I would do in this situation, if you missed the boat the first time, is get yourself 2 Fibonacci's, because it's a little bit messy. You can have a precise one here around 29 cents and 30 cents. All you would do, wait for a pullback towards these regions here, or even this trend line, and enter 50% here as we've done before, and another 50% of your final remaining position if you see price hit here. I do believe you should at least be seeing a movement to around 30 cents. I believe once price hits 30 cents to around 29.5 to 29.8, you have an excellent buy opportunity on your hands, where price from there could really begin propelling higher. So just watch out with any movement like this. Of course, you will start seeing some pullbacks as well. Nice healthy pullback, retest some broken ground around 30 cents or so, and we are going to start pulling higher. So looking at this from now, pretty much disregard this trend line for the time being, because all I'm waiting for, the reason I've left it, is once price breaks out and it pulls back and retests this level, it will be used as another region to buy physical crypto, and of course to add continuous long buys, because I'm still sticking to my bias of 46 cents up here happening once again. As you've seen, every single time we hit 40, every single time we fall lower, we always push up to 46 cents once again, and that's why I have not changed my bias on this move. The reason we dodged the bullet on this as well was because I preempted the 30 cents movement, and looking at this now, just tapping into that buy zone. Just imagine this level in particular is simply a level where institutions buy, or any big orders buy. buy zone, heavy accumulation region. That can stay there. So all you're seeing here is a buy zone and a heavy accumulation region. If you look at this properly, every single time it hits here, the wicks may push through a little lower, but overall, price is refusing to break this level. Price is just continuously being manipulated back and forth. When it comes down to this level, it rejects instantly, and that's because people do not want it to break. Price is being pushed between this level here and this level here by whether that's Ripple themselves or institutions. All we know is there is being a big suppression, and traders are capitalizing off these bounces back and forth. And it wouldn't surprise me yet again to see the same movement, a huge movement, and see from what would be around 30 cents, a very significant movement back to this level. So you can basically capitalize and understand these levels and work like an institutional trader would, and just literally, once now that prices hit this level, it's much more realistic buying here, or even in this region here, versus buying up there. That's why I said do not buy at 40 cents. It just wasn't looking good. So that slam back down for me is a massive level. The trend line yet again is where the biggest money is made on XRP in particular, and BTC, as you can see, let's get rid of that now. We're just waiting for this to come through, so just wait and see if it does hold this level with the Fibonacci over there. And overall, I do think this could see a nice little push lower, but of course that does put a bit of concern into XRP as well. But the beauty is, if alt season is coming and the altcoin surge is actually going to be commencing, then using the theory that XRP very rarely breaks below, in the event we do see BTC start melting, it's either going to cause a profit shift where XRP will just blow through the roof anyway, or you're going to see it aid a little push lower. So let's say BTC does fall a little bit lower in that final little bit of movement towards the $8,400 region, then you can expect XRP to start seeing around 26 cents as well. So it's on my radar, it's very understandable, and if I get rid of this buy accumulation zone, looking at where prior wicks have accumulated before, I will just mark this up as a little bit of a zone where threats could be occurring. So just watch out for this. In the event BTC does do anything manic, you can put this on your radar straight away. Little spike down to this region, and that's most definitely where I'll be buying large sums of the crypto in physical form and potentially entering a very large margin trade long as well from this region. So waiting for all that to unfold for the time being. That's all looking good for now, but guys, overall that is really it. We are really just going for that simplistic leaned back, I don't even know what I was saying there, a laid back approach to the trading strategies that I've been showing you over the past few days. And again, just to touch on the trade that actually hit stop loss, what I want to say is as well, in particular, if you are abiding by the principles of 1 to 2% risk, there should not be any liquidations, there should not be any losses. All you should simply be doing, after capitalizing off many of these moves I provided you, and you're taking profits along the way, and your stop losses are at break even. The first trade was closed out around break even and then a little bit lower in the loss. Then this one here was just closed out in a loss. There was no break even, there was no nothing, it just went straight into a loss. That was unfortunately out of my power and out of anyone's power, but that's the point. The point is, if you are winning 3 or 4 trades in a row after giving them, you should have more than enough. You should have at least more than what you are risking, because I'm giving you trades that are literally 2 to 1 or 3 to 1, then you should at least be making 2 to 3 times your risk allocation. Now when you times that, let's just say you are risking $200 and you end up making $600, and then by 3 or 4 trades you've ended up actually making, let's just say, $2,000 after 3 or 4 trades. That now accommodates a risk. So let's just say over all these moves I gave you here, you've ended up with a normal risk of $200, making $2,000, and you're still risking $200 a trade. Remember, when it comes to stop losses being hit, if you are losing your account balance, if you are losing capital in a very extreme proportion, that's actually down to your risk management and greed. That's not down to the trades themselves, because I could give you 10 in a row that actually didn't work out, and if you're following strict risk management principles, you would not have eaten up much of your account. You would have probably gone into a 20% or 10% region at max, but you would not have obliterated your account. So how I can give 4 or 5 amazing trades in a row, very precise, almost to the T, and a lot of money can be made, I'm not sure how a single trade would be able to wipe anyone out. So that is something that I am touching on heavily in the course. I think risk management is so vital. People jump onto these trades without really thinking what's going to be happening, and they think they can just follow calls. But the truth is, if you're not abiding by risk management principles, the most perfect trades I could give you, like the ones from here to here, they would not mean anything when a single bad trade comes through and you wipe out your whole account. So if you are risking $200 per trade, you end up making, let's say, 2K overall. This simple move here, which we had, which was in the Telegram, this move here which was around a 3-to-1, I believe. I think it was over here. What did I say? Can't find it, but there's a amount. You get the point. So overall, if you have made all that money from there, a simple move like this should not mean you've lost the whole $2,000 you've made over 3 or 4 trades. So that's why profit taking is essential, and that's why you should not be risking more than 1 to 2% unless you have literally been in this market for years and you are understanding how to hedge, you understand all these other factors that go into risk management, and from there onwards you can really consistently push a little bit higher into a 3 to 4% mark, but you shouldn't really be going further than that anyway until you've understood everything essentially. So a good understanding now is, and again, this is why you can really recoup those trades straight away. If you were to potentially catch that movement, let's just say on BTC, from the region called, you would have known already if it's going towards $9,200, even if it fell to $9,100, you would have had a simple stop loss down to maybe here, just below the wicks. Looking at a potential target even now, let's say you hit there, that's almost a 4-to-1 risk reward. So even then, from a single loss of one trade of $200, you could have made potentially $600 to $800 off this move alone, and you would have recouped all those losses plus make even more on top. So I definitely think there needs to be more focus on risk management, which I'll be covering very soon. But hopefully this alone can really help you understand that there should not be any wrecked or any damages or any liquidations when you are following these wizard guidelines. The reason I post so much for free in the Telegram is because I want you guys to be capitalizing off these trades without being consumed by greed. It should be as simple as possible, and it should be very laid back. Again, we're waiting for this to come through now. All I would do in this situation, using a risk to reward tool, let's say I want to wait ideally for 10,400 or around 10.5. 10.5 would be when my main entry is. Target in the likes of $8,500 to $8,400. You're already looking, even if you were to enter there, you're looking at a nice 2-to-1 risk reward. All I would do in that scenario, and bearing in mind a good way to look at this as well, here's how to explain this. If you are using 50% of your position now and another 50% later, let's say I enter the first 50% at the 61.8 fib, targeting around $8,400 here. That, even if I put it above the wick, is still over a 2-to-1 risk reward. So if I'm risking $200, I'm looking to make $400 in that process once my target's hit. But let's just say 50% of that position is entered there. So actually, my full loss amount would not be there. I can actually extend that one even higher, bearing in mind. So bearing in mind, if I was to risk $100 on this trade, that means I can extend my stop loss even further. Instead of pushing it there with a bigger size, you can extend this up to there instead. You've now gained yourself a massive and wider stop loss. Yes, it may eat into your risk reward a bit further, but then when price jumps even further up to here or the second fib, all you would do is have a much tighter stop loss to equate for that $100, or even add a bigger position. Don't forget your position sizes can alternate. You could have, let's say if you're doing one lot, you could either break that down into 2 0.5s, or you could have a bigger one in the beginning and then a little bit of a smaller one if it was to push higher to counteract and hedge any losses that come through. So again, all of this is covered in incredible depth in the Wizard platform, and I'm also providing a lot of this in the videos anyway. If you go back and check some of the risk management videos, go through the Telegram, especially if you're new, you'll find a lot of educational content absolutely for free. I've been doing this for free for almost 7 months now, and it's been going magnificently well for many people who have been capitalizing and really utilizing the strategies. Remember, at the end of the day, that's why I am so emotionless and heartless when it comes to trades maybe hitting a stop loss, because for me, my risk management is in control and I do not need to stress, and that's why we brush them off, we laugh them off, and in a single given trade, you recoup those losses anyway. So I'm trying to instill that in all your heads, but more importantly, guys, I hope this has been another educational Wizard Wednesdays, and I'll be seeing you straight in the Telegram after this anyway, where we can start uncovering what will be happening to BTC and XRP as we see the next leg higher towards 10,300 to potentially even 10,656 at the 78.6 Fibonacci. Will it be a breakout or will it be a short? All I know is we will capture the move regardless. Guys, see you in the Telegram in a second.